Hi, and welcome to ESG Mena podcast. I'm very excited today to meet with Thomas Vanhee, managing partner with Aurifer. Hi, Thomas. How are you today?
I'm very good. Thank you very much for having me.
It's our pleasure. We look forward to meeting and talking with you. And first of all, I want to ask about the new corporate tax law, the UAE's new corporate tax law. Can you tell us about it?
Yeah.
What's new in the law?
Sure. So obviously this is a story which has been a long time in the making. There were preparatory works a long time back, more than 10 years back as well in the UAE. But I think what has accelerated the implementation of it is the adoption on an international level of certain standards that you might have heard of, such as the global minimum tax. That has been a bit a trigger point for the UAE for the adoption of UAE corporate income tax, which is coming in June of this year.
Okay. So but with UAE hosting the COP28, how can the UAE lead by example once again with its new corporate tax law?
Yeah. So maybe to discuss a couple of things as well about the first of all, about the characteristics of the UAE corporate income tax law, right? So it's a relatively simple and straightforward law, especially if you compare it to more mature jurisdictions. It has a low rate of 9%.
9%.
It is 9% indeed. It's a business-friendly legislation. There's a lot of exemptions in there. It's going to continue to put the UAE on the map to attract foreign direct investment, as it has always done. There's a lot of facilities there which reduce the effective tax rate as well. I'm just thinking about things such as tax grouping, so grouping different companies together. Something called a participation exemption, which exempts dividends and capital gains under certain circumstances. You can transfer losses from one group entity to another. You can carry forward losses. So anything that was helpful in trying to get the effective tax rate down has been done. And in addition to that, we still have a 0% rate for free zone entities. Now that's subject to conditions which are yet to be published, but what you can see is really that there's been a lot of thinking around making this a very a beneficial system. And I would say lastly on that point, on the characteristics, there's no withholding taxes, which are due on any outbound payments. And that's, at least for now, and that's a very good thing as well. Similarly, in terms of compliance and other administrative aspects, the law is, and the implementation of it is pretty clear. There's a one-time filing, there's no advance payments. We need to wait for a couple of more things, but given the how attractive the regime is, and given the extensive double tax treaty network of the UAE, I think this is really hitting the nail, or hitting it home, let's say. Yeah.
I'm sorry for interruption, but I do have a question. Do you mean that the free zone is going to be exempted from the tax? Because as far as I remember, I went through the Deloitte report on the same, and there wasn't an exemption for the free zones there, yeah? Or
yeah, so technically speaking, it's not an exemption; it's a zero rate, 0%.
Okay, zero rate.
Yeah, income earned by free zone companies. Now, what you do see is that's subject to a lot of conditions, and it's amongst others subject to the condition that you earn qualifying income. And what is qualifying income has not been defined yet. So where we might end up with is either free zone entities that are active in the mainland, which they're not supposed to, are either going to be disqualified entirely from 0% or partially. And that's the point that is pending. That's the major critical point, which is pending confirmation.
Okay, fine. Well, as far as we heard, there is a chapter regarding ESG in the law. Can you explain to us? Can you tell us about it?
I'm not sure which chapter specifically you're referring to on ESG.
In general, where is the ESG and the law?
So the I wouldn't say it's straight in there. Yeah, there's no direct reference as such. Now, you're referring to COP28 before. What you can see currently is that the legislation, the only legislative instrument which has been published so far is a law, and there's a lot of delegation to the UAE federal cabinet, to the Minister of Finance and the tax authority. Now, I would imagine that very similar to other jurisdictions, that there's going to be some thinking around what are measures we can take which address climate change, what can we do which would be environmentally friendly. And at that point, I think we're going to look at things such as, you know, higher deductions maybe for electric vehicles, trying to encourage investments in solar panels, sustainable building practices, taxing polluting industries maybe in a different way. So while the UAE leads in a lot of areas, maybe amongst others ESG, from a tax point of view so far, we don't see just yet a specific signal as to measures to be adopted on that front. But it's a matter of time, because that's what we're all evolving into. Yeah.
Because as far as we see the government, there are so many initiatives in that regard. So we expected that there is going to be more consideration into the matter in the corporate tax laws, because what actually the heavy problem for the initiatives is the compliance, or the, let's say, the parallel reaction of the private sector towards the sustainability or the sustainable future. So that this is where my question came from. Was the law a method of, or a kind of investors deterrent, or is it a mere step towards meeting the recommendation of the IMF that are a long list of recommendations?
So I think in terms of the involvement of the IMF in this specific measure, which is the adoption of the corporate income tax, I think we should not see that as too important, the involvement of the IMF. I'm saying that because the IMF would look a lot around, look at fiscal policy and recommend measures to address fiscal imbalances. That's currently not a problem that the UAE has, in part because the price of commodities is high, because excise tax and VAT has been implemented a couple of years back, a bit longer than 5 years back, and that has addressed a lot of the challenges that the UAE had at the time. The adoption of UAE corporate income tax is not with the view of collecting more revenue. It is with the view of aligning its tax system internationally with its commitments vis-a-vis the other countries that are part of the inclusive framework, which is a forum started by the OECD. And the UAE wants to comply with that, wants to adopt a policy in compliance with that in a smart way to ensure that it keeps its taxing rights, and that's what we're really doing.
Okay, so I'm sorry. Yes, please.
No, and I would say, just in addition to that, I think it means that the UAE is adopting a corporate tax system which is an attractive one. Obviously, 0% before was maybe slightly better, but this is actually a really smart system. And I would add to that as well is it's not always good to be considered as a tax haven internationally. It's better to tax a bit than not to tax.
Okay, interesting. Okay, so how can this law be a progressive move to reach the sustainable goals of the country in general?
Yeah, so I guess what needs to happen first is the revenues need to be collected, right? So there's two things. Now, one is how to design the corporate income tax law and build in certain objectives around sustainability and whatnot. The second thing is, how do we use the resources, right? And once you don't have resources before collection. So the first step is collection, which is not going to happen before February 2025. And the UAE may choose to allocate some of these revenues to ESG best practices towards its sustainability goals as well. I think in part, in terms of resources, the UAE is currently aided by the fact that the commodity prices are high. And the UAE does acknowledge that in terms of the policies that it is required to adopt, you do see more research into alternative fuels, for example, more a push and drive towards adoption of electric cars and these kind of things. So while it has a very good fiscal surplus currently, I think it's a really good time to work towards the COP28 and work towards those goals, because the funds are currently there to invest and to try and realize those goals, and that makes the transition currently easier.
Really hope so. So can you give us an overview on the same regard on the region? Let's say,
yeah, so
KSA.
Sure, yeah. So the KSA, Qatar, but also the other GCC states minus Kuwait, they are facing the same questions as to what policy to adopt vis-a-vis the global minimum tax, which is technically called Pillar 2. Yeah. Those policies are not necessarily immediately linked to ESG. So they are currently facing the same issues or the same challenges, rather. As to trying to address also sustainability goals and whatnot, the focus on in most of the GCC states is currently just the diversification of the economy, right? Moving away from oil and gas revenue, and some countries have been more successful in that, some countries less. But I would say that's the first objective. If while doing that, they can also reach sustainability goals, then I think that's, it's a double whammy. It's a, double up, really.
Are the hopes high for that?
See, I think the first priority is the diversification of the economy. If at the same time we can realize sustainability goals, I think it's a plus, but I don't think it's the first priority. Yeah. In terms of taxation, though, what we can expect is more changes in the tax policy. And if there is indeed a bit more focus on these sustainability goals, we'll see also changes to the tax legislation trying to achieve this. What we're currently seeing is more is change, not necessarily with the view on ESG. For example, the introduction of personal income tax in Oman has no relation to ESG. The potential introduction of VAT in Qatar as well is not going to be done with the view of reaching certain sustainability goals. Inevitably, though, those systems are going to be adapted, are going to have to be adapted to reach those goals. So that focus will shift. The first focus currently for example, Oman, that is an IMF recommendation, implement personal income tax, implement that, and then let's see, once we collect enough money to reach a fiscal, a better fiscal position, then let's try and focus on these sustainability goals.
All right, that was great. Yeah,
thank you.
I want to thank you very much, Thomas. Is there anything you want to add?
That's it for me. I'd like to thank you for having me, and look forward to seeing the recording online.
We want to thank you for your time and for your insights. Thanks a lot. And thank you, everybody, for watching our podcast with Thomas. Thank you.
Thanks.